I'm the CEO of Neex. I'm very pleased to be here today in Muscat, and similarly to the previous speaker, this is actually my second visit to Oman, and I certainly hope it isn't my last. It's a beautiful country. What I'd like to discuss today, or just run through very, very quickly, very basically, is the subject of how retail traders and retail trading impacts and fuels liquidity in the financial markets. And what I mean by that is, do all your trades mean anything to everybody else? Well, the answer is yes, they do. They really, really do. The population of the world is anticipated at the end of 2025 to hit something like 8.2 billion people. Now, if I were to ask anybody here to have a guess how many people have actually got access to the internet, who would like to take a wild guess? Well, I'll tell you, it's 5.5 billion people have access to the internet, which is absolutely phenomenal. So if I move on to the next slide. Here we go. So if we look there for the moves, essentially, if you look back as far as 2010, only 30% of the world was online. 2020, it doubled. So the rate of advancement in technology and access to financial products is phenomenal. And if we think about how that affects our daily lives, everybody is capable of getting hold of a smartphone or a laptop and accessing exponential amounts of information, be it financial information, be it anything at all. So let me just move on 1 second. And this is something of the impact that retail trading has on the market. Historically, and certainly when I started in the industry, market making and price making and liquidity was all down to what we called the institutional markets. That consisted of big banks, big brokerage companies, and big financial institutions. And what would happen is, on any given trading day, there may be a major move in the market that was only amongst those particular players. And if you were a retail trader, you had no idea what had happened until the next day, when essentially you read about it in the newspapers. But now, retail activity is actually fueling and helping making those moves. And here we go. This is a particular example here. That spike there in that particular stock was driven completely by retail traders. And that prompted a sell-off. When it peaked out at that level, it prompted a sell-off by the institutional market. But if you bear in mind how many retail traders it took to do that, it's absolutely phenomenal. So, if I may. So if we look now, the higher the growth in retail accounts and the number of trades in accounts, it makes up for some in Europe. It makes up a staggering 31% of total trading. In the Americas, it makes up 13%. In the Middle East and the Asia Pacific, it's 52% and 61%, respectively. And in some exchanges globally, it's as high as 80%. So retail participation in the markets is playing a very serious part. And here we're looking at different patterns in the evolution of retail trading in equities. I think that the charts pretty much speak for themselves on how it's driven. And overall, the point I'm trying to make is, never think of yourselves as a small fish in a large sea. You're not. Your part is very, very important. Your trade is giving somebody else an opportunity to buy or sell exactly what you wanted to buy or sell, the other way around. Now, what are the driving factors? The driving factors that the retail market can drive on. So macroeconomic factors, what determines that? So we have global events, geopolitical events that will spark an interest from retail clients to make a trading decision. We've just had the US elections, and that obviously created a lot of volatility and therefore a lot of trades. Technology. The advantage in trading technology now, everybody has a smartphone, everybody has a laptop, and technology is improving on a daily basis, or it seems rapid basis, especially with artificial intelligence. Market conditions, when we have higher volatility, create different opportunities for profit and loss. And we witnessed back in 2020 when we had the lockdown, there were opportunities there where people were stuck in their houses with nothing really to do, and they taught themselves about trading, and they got involved and they made trading decisions. Many will have made money, some will have lost. Mobile applications, user-friendly apps, and technology that give you information, technical information, fundamental information. And the last point is actually very interesting because this is what a lot of retail clients focus on now. With social media, you have followers on X, Reddit, Instagram, and various other groups. And there are a lot of communities that share information amongst themselves, and inevitably they may get into a herd mentality and all rightly or sometimes and quite often wrongly buy or sell a particular commodity or a currency pair. But social media is a huge drive in retail trading. And if you were to follow trends in the market, you would see that there was a significantly higher volume of trading ETFs, that's exchange-traded funds, shorter holding periods of positions, but a higher frequency of trades, which means that people were buying or selling something with a much quicker turnaround. Now then, how are retail traders approaching CFD instruments? This is very interesting. Sorry, I got carried away there. So the leveraging factor on CFDs. Many brokers will offer you a very high leverage. You may receive sometimes up to 1,000 to 1. So every dollar you place, you can trade 1,000 times more. I think it's very important that you manage your positions carefully and don't over-leverage yourself. It looks alluring, it looks exciting that you can assume and take a big position. My advice, and I don't give advice like the previous gentleman, is just take your time, analyze the product you want to trade, and take a slower and sensible approach. Market access. The CFDs provide access to global markets, including stocks, commodities, currencies, indices, and cryptocurrencies. The latter being extremely popular. Everybody is interested in Bitcoin and other similar cryptos. The good thing as well, when you are trading in particular with equities, with CFDs, you do not own the underlying share. You're purely trading the price difference of that stock. And you can buy that stock, you can sell that stock, sometimes with fractional pricing, so you can actually buy a smaller amount. Your only interest is the price difference of that particular stock. And this goes on to the point I've just made. Short selling of CFDs made easier, so you don't, in the stock market, in the physical market, it's very difficult to actually short sell a stock. The flexibility of CFDs, they suit various strategies. If you have a physical commodity that you want to hedge, that you're concerned about the price of, you can use CFDs to hedge it should the price of that commodity go in a different way. The convenience of CFDs may be traded online on user platforms. There are various different markets and applications that can be used. And the risk management factor as well, and the CFDs as a hedging tool. And this is just some of the most popular stocks that are traded on the CFD markets during the course of 2024. All of these I'm sure you're quite familiar with, but they were very, very heavily invested in by retail traders. So my company, Neex, what we offer is a very secure access to the markets where client funds are segregated from our own in tier 1 banks. That means your money is safe. We give extremely tight pricing, very low to sometimes zero commissions, tight spreads where in some cases the bid-offer relationship is as low as zero. Our technology is cutting edge, which we pride ourselves in, 24/7 global support, and most importantly for yourselves as well is a lack of latency with super fast execution. And these are some of the commodities that we trade. Foreign exchange with over the 60 pairs of leverage, depending on which jurisdiction within our group you trade in, up to 1 to 500. Commodities, obviously the most traded commodity at the moment is gold, and that's quite understandable given geopolitical events. Indices, we trade FTSE, S&P 500, and of course individual US stocks. The most used technology we have is MetaTrader, which is very common in the industry, MetaTrader 4 and MetaTrader 5. That's an option that you can take yourself on which you select. My advice would be, if you're not familiar with the technology, is to download the demo and try it out first and see how you get on. So that is pretty much it, but I just wanted to stress the importance of the retail market. Your participation is a very valuable asset. Without it, the institutional market would suffer dramatically. There'd be a serious lack of liquidity. There would be big gaps in the market, and there would be times where prices would be so wide they're totally untradeable. I hope that's been insightful to you all. If you want any information, our booth is very near the entrance to the main hall where we have Arabic speakers, and sadly I'm not one. But thank you very much for having me, and I hope this has been some assistance to you. Thank you.